Hi, Vaughan here again to cover off on a few more frequently asked questions you may have about Exceed Capital, our trusts, or even the industry in general. Investment time frame and can I exit early? The majority of our trusts have an investment term of 5 years, with a few being 7 years. The reason for this is property should be considered as a medium to long-term investment due to its nature and the large transaction costs associated, stamp duty, setup costs, legal and conveyancing. As our trusts are unlisted, there is no active secondary market to sell units. However, we will facilitate a transfer if you have a buyer or want to change within entities or family members, etc. What happens at the end of the investment term? At the end of the investment term, we will take it to a vote to investors with a recommendation from ourselves. Do you want to extend the term of the trust for another period or sell the asset? We require a special resolution of 75% or more of voting units to extend the term of the trust. At this point, we may also offer a redemption facility to those wanting to exit the trust at current market value if the term is extended. Cash return versus internal rate of return, or IRR. A cash return is the actual income you'll receive in your bank account, exclusive of tax, on a monthly or quarterly basis, and is constantly measurable against targets outlined in the information memorandum. Any capital growth relative to purchase price is also paid out at maturity. An internal rate of return sounds higher, but is a total return and includes income and forecasts of capital growth. The only way to measure this against its targets is upon sale of the asset and not on the way through. This measure is usually best suited for developments, where often there is no income paid on the way through until sale. Charging of management fees. Ongoing management fees can be charged on assets under management or, alternatively, aligned with investors through a percentage of gross income. The latter is always preferred as the manager is incentivized to maximize occupancy and therefore maximizing the returns to investors. Often managers charging on assets under management appear at face value to have a lower percentage fee. However, this is usually not the case, and particularly in changing market environments such as COVID, where the gross collections were heavily impacted. If you have any other questions that I haven't covered, you're welcome to call me directly on 0425 311 892. Thank you.